Good afternoon. Distinguished guests, ladies and gentlemen, it's my great pleasure to see you again. We have a presentation before, more of a discussion points on the hot markets. So we are going to move from hot markets to hot projects. So this is more practical. Not that the other one wasn't practical, but hopefully through this one, you will get a glimpse of what's happening in the region. What are the key areas of the projects that's going to be defining our industry, business model, as well as policy-related mechanism. With that in mind, we have a star-studded, I would call it, a panelist exclusively working in the region, investing and operating the assets. So I would like to first introduce our distinguished panelist. The way we are organized, going from my left all the way to the end, and the names are listed here. So the first on my left-hand side is Dr. Amer M. Al-Sawa, Senior Advisor for EPRICOM. Yasmina Barnasoud from Business Intelligence Manager of Mazen. Nadia wasn't able to present today. She's attending the WISER, the Women Solar Initiative, so she couldn't join today. Roberto Diago Arozamina, if I said correctly.
That's pretty close.
The CEO and Special Project Officer for Abdulatif Jamil Energy and Environmental Services, very active in the region. Nur Musa, CEO of Desertec from Saudi.
Technologies, though.
Also. Mohammed Atif, Area Manager, Energy, Middle East and Africa, DNVGL Energy. And Dr. Andreas Storzel from CEO, RV New Energy. My first question, I would go into deep into the questions to the panelists. That we will organize it, we're going to have a Q&A session for the next 30 minutes to 35 minutes. Please take notes. You have the iPad, and form your question, send it to me. Over the last 10 minutes before we finish, we're going to have directly ask your questions to our distinguished panelists here. So the first one, we start with a very general macro perspective of the region. So Dr. Amer, you've been advising and as well as working in many different countries. Okay. And we have seen the macro of the region. We have seen the oil price is slumping, the deficit is widening, the interest rate in US is going up. What do you see the biggest factor that will on the growth of the MENA region, especially to renewable energy?
Okay, first I'd like to thank you for inviting me to this conference. In fact, I have summarized my ideas in 5 factors. Okay. So the first one is, of course, is the need for a new generation capacity. And if we see in Saudi Arabia, for example, in the last 15 years, and it's not a short time, it's a long time, it's been around 7%. So there is a real need for a new generation capacity. This is to cover new loads and, of course, replace retired power plants and inefficient, and that's very important. There is a move to replace inefficient power plant with efficient ones. This, of course, it's been, as I said, happening, and the capacity has been increasing. Just to give some numbers, the capacity has increased from 20 gigawatt to 60 gigawatt in this period. So it's a quite. The second factor, and as you know, is one of the main factor for using solar PV, is to save fuel. And the price of fuel, if it continues to go down as it did, this is a major factor that will affect the competitiveness of PV in particular. So this also affects the available funds for the government, and this is very important. Available funds for government to spend on this highly capital-intensive program will be shortened. So this will have a double effect, the oil. If we took on the levelized costs globally, levelized cost of electricity for PV, and we see that it has reached grid parity in a number of areas. So it is coming, I mean, for sure. And the dependence on oil is also shrinking. In the last 40 years, it was moved from 25%, of all electricity produced by oil. It has gone to 4%. So this is very important that we are talking about, relation between oil and PV. But oil is not anymore used in generation globally. Globally. However, this is very important. However, in Saudi Arabia, it's generating 60% of the electricity, you see. Why? Because of the subsidized price.
Absolutely.
And of course, this is very important. The third factor is, in Saudi Arabia, is the availability of gas at an affordable cost. In fact, the production cost of the non-conventional gas is the deciding factor in Saudi Arabia. It's a very critical point. Now, the fourth point I have, or the fourth driver, is that in Saudi Arabia we have started an efficiency improvement program, like in building insulation, air conditioning, automobile, the metro, or transportation. All this is to achieve the target of saving fuel. The target for this program is to save 1.5 million barrels of oil equivalent by 2030. So it is so if we leave things without, any interference.
Which is they have pushed it to now 2040. If you look at the...
Yes, yes, correct. So if we leave, as is status quo, then we will consume all the oil that we generate, and nothing will be exported, and no revenues will be there. So it's a very critical point. The fifth point is the commitment to clean energy in the area and in Saudi Arabia, and to sustainable energy. This is very important. In order to replace any new loads or new generation capacity, we want to replace the non-renewable resources with the renewable ones. This is the achievement. And if we talk about the world has already said its word in Paris last month when they said that we are going green in COP21. And regarding this year, if we talk about this year, in 2016, and if the prices continues as low as they are now, then I think the progress in solar PV in Saudi Arabia will be moderate.
Okay. No, thank you very much. I think those are if I just summarize it, you believe the macro trend is in the favor of installing solar, more but not less. And thanks to the COP initiative and the agreement that was done in December in Paris, this will somehow accelerate.
Correct.
Because of the INDC, at the national level, they did some commitment. Roberto, you are developing gigawatts of projects all over the world. And don't want to disclose, but when we have talked last time, you mentioned that your team is very busy developing projects worldwide. Now, with the macro, unless you disagree on the fundamentals, how do you see it in 2016? Do we see an uptake of renewable? If I give some figures to the crowd here, in 2015, there was roughly about $4 billion of projects was invested in 2015. How do you see 2016 going forward in the region, in MENA?
I think in the region, we're seeing an increase because of the DUA project. 800 megawatts is a significant volume for the region. There's a positive trend which we're seeing that will support the installation of renewable energy, and that is the reduction of subsidies. So as subsidies are reduced, the retail prices are increased, then the economics for renewable energy are there. However, we do need to compare our price of generation with the cost of generation, the real cost of generation, not the subsidized cost of generation. We're seeing an increase also because Abu Dhabi has announced the 350 megawatts. We have 50 in Jordan. Egypt is a special case. Egypt is very aggressive in terms of their renewable energy, but the unavailability of foreign currency in Egypt remains an issue for people to actually invest in the country. So in general, we're seeing an increase over prior years. That doesn't mean that we're moving towards an ideal situation, but the Mohammed bin Rashid solar park is actually 5 gigawatts capacity. And this is just one more step towards filling that park. So we're seeing an increase in volume there. The issue with Egypt is that even if we're able, and in fact we already have financing, and they give you the financing in dollars, you build a plant, you start generating electricity, you get paid in Egyptian pounds, even though it's tied to the dollar exchange for that day. Day one, you would default on the loan. You would not have dollars to pay your bank. So that's an issue. Until the government resolves that issue, there will be a steady progress because we cannot stop development, but I would say a delay in real investments into the country by foreign investors. Local investors are a different story. But in general, we're seeing more projects than we had seen in the past. And for us as a, let's say, Middle East company, for a renewable energy industry to be generated or to be created in this region, you need to have sustainable programs that are constant in time. One 800 megawatt plant is not going to be enough to justify manufacturing facilities. And of course, Saudi Arabia remains as the major promise in the region. I think the moves towards the reduction in subsidies is going to help positively to a potential move in the renewable energy space in Saudi Arabia.
Thank you very much. I mean, I think I fully agree with you, Roberto. Saudi Arabia will be the cherry on the cake. A lot of the initiative in the Middle East and North Africa, including all our companies that were here, were based on the fact that Saudi will be the biggest renewable energy giant. And as the market is not taking off as fast as we could see, the other countries, fortunately, rolled out, Morocco being the point, Jordan, Egypt, those three of them. Talking about that, Noor, you have a solid and concrete project in Egypt. And how do you see that those projects are materializing it? What are the, because there are as Roberto clearly pointed out, the ambition is there, the announcement is there, but on the ground, are they happening? Do you see it constructing this project in 2016?
Well, it's really they've put us on a race. I mean, there's a race from the authorities themselves. I mean, there's a race with the developers among themselves. I mean, you know, there's limited connection to the substation and the timing and so forth. But we have a clear-cut date of if we want to tap into the tariffs, we actually have to close by end of September, early October. And that's a challenge. Chris and Harry would have actually shed more light. Nevertheless, I mean, if you look at Egypt's progress, I mean, if you look at, if you compare it to other governments where they've made announcements into a cohesive program, and from the time of announcements till they actually deployed, Egypt is actually moving at a very, very fast pace. I mean, by all means, it's moving very fast. And because it's moving very fast, they're making, you know, there's a lot of trial and error in the process. And it's not perfect, but they're really making tremendous amount of progress. We're confident that the issues will be resolved by then, by closing. Now, if you look, and I agree with Roberto, I mean, there is a currency issue that is not, however, it's not troubling the lenders so much. So there is an understanding, a bigger understanding that these issues will be resolved by the time we actually start to get paid, which would be towards the end of 2017, early 2018, somewhere along those lines. And Egypt will prevail. I mean, I think that's what we're all betting on. I mean, so yes, there are current issues. The lenders are very confident, and there's some sort of unspoken understanding between the government and the lenders, and issues are getting resolved, and resolved very, very quickly. So we're very bullish on Egypt's market. Now, as a manufacturer, we're even more bullish on Egypt's market from a longer perspective, on distributed systems. And as they're removing subsidies from from the grid, you are going to see a major transformation into the Egyptian market from a wheeling perspective, banking, energy banking perspective, and basically distributed networks. And today, I mean, you already see resorts already going towards that line, you know, into the trend of applying solar and wind farms independently of the FIT program. They're seeing, I mean, you know, they're all diesel-based, and the cost of diesel is much higher than solar. I mean, and that's a fact. And you're seeing in disconnected places, solar is actually being implemented. And we are planning to tap into the market into a big way. And we believe that the distributed systems across MENA and Africa is going to be a much larger market than basically the utility scale business.
Okay. So you do see that your project is materializing with
Absolutely.
some challenging in 2016.
No, I didn't say that it was a perfect, smooth transition, but it is.
But the framework is there, the intention is there,
It has
and
to
the
happen.
mechanism
I
is
mean,
put in
Egypt
place.
today has portable plants that is costing them a fortune, right? We're talking about 4 gigawatts of portable
Absolutely.
plants that are costing a fortune, right? I mean, we're talking. They would be saving a tremendous amount of money by implementing solar. So it's not really, it's a do or die situation, and it's being pushed heavily from the president himself. I mean, he's actually following up on progress. He's actually pushing the minister, and the minister is actually pushing further down. But yeah, so we're seeing it happen. Is it a perfect? No, by no means. But I see it materializing, yes.
Thank you, Noor. Thank you for this very, let's say, rather positive outlook. I think Dr. Andreas wanted to mention a point or two.
Well,
Please.
just to add from a third developer, I mean, I join your bullish view on Egypt. It's really been developing well. We're talking to several developers in joining projects. But what holding us back and is really the financing issue that was pointed out already, the convertibility and the limited finance by the DFIs. Most of them have exceeded their package or reached their limit.
So when you're saying financing issues, I mean, we have seen the EBRD have committed a significant amount of a fund for Egypt. We've seen that. We've seen IFCs putting there together. You're talking about the financing at local level.
Well, I'm talking about the DFIs as well, and we see now that the local banks are stepping in partly, obviously at less attractive rates. But to answer your question, yes, they are stepping in, and that's well received as well. But I'm also talking about the DFIs and the limited volume there.
And just to go one step more detailed, when you build a project around the feed-in tariff, existing feed-in tariff, and through your mechanism with the banks and the cost of capital, did it change your profitability or let's say the project significantly? Is there any issue that you faced after when you started to see that you have to put a deposit, their banking, financing may not be the right, the development cost would be probably more than you assume, the horizon of the project probably shifted. Did you get any surprise as a developer? And it's a general question.
You're referring mainly to the returns with the local financing package. I think it becomes a critical topic to see where banks offering financing packages.
May I just add to that? I mean, yes, it is very largely less attractive. However, there is sort of a gamble per se. I mean, you're rolling the dice that if that happens and we are seeing a devaluation of the currency, there is an upside to that. So you are borrowing in Egyptian pounds. We anticipate that today, as of today, the Egyptian pound is globally is further discounted. So we are going to see a devaluation of the Egyptian pound, and the upside on that might actually improve the returns. So
well, this is an important point because
I fully agree with that upside.
I mean, I had a discussion yesterday at the same time around with the Ministry of Investment from Egypt, and the perception at the ministry level was there was very generous feed-in tariff, And I actually sort of defended the industry saying that, yes, it is generous, but then if you look at the details of it, the currency risks, the convertibility issues, the sort of the time horizon to start a market, it clearly justifies. Probably as this sort of, let's say, the feedback mechanism should go into the ministry level, because otherwise, when they see, and we'll talk about DIWA, which is a very different game in itself, the prices of electricity going such a southward than ever seen before, it can create some sort of confusion in the mind of people. So I think we have to clear that. I want to get back to Mohammed. Actually, we hear about Saudi, which is a ever promising market. We heard about Egypt, which is a market is in execution. What are the other markets, Mohammed, that you see in terms of actual delivery of the project in the next year or so? Besides this, in between these two.
Within this room, okay. You're laughing, Noor. Okay. Let's touch upon the Kingdom of Saudi Arabia. I mean, I think there's been a sea change there. The pace at which Saudi Arabia is currently moving, it's not visible to the public, but already we're seeing Saudi Aramco initiating renewable energy measurement campaigns. Wind energy management campaigns are being done. Projects there are being pushed forward, at least at the pre-feasibility level. Very recently, Saudi Electricity Company released tenders for 2 by 50 megawatt solar plants into the market and a 1 by 50 megawatt wind power plant into the market. So they're trying models.
But these are not open to the public, correct? These are the internal understanding.
EPC.
It's an EPC basis.
Well,
These are not tender.
No. There is the opportunity for the IPP model there. They'll be looking to make do this on an IPP basis.
On the IPP basis,
and sign a
250
PPA.
megawatts.
Exactly. So that is a very good sign, because they're really in this day and age. 50 megawatt is really a pilot sort of scale. But we are seeing growth there now. If they get the model correct, I can see Saudi Arabia expanding significantly. Very recently as well, very interesting for us, as we're advisors, we get pulled. And we're being pulled into Kuwait right now, because target was announced that by 2020 they also want around 15% renewable penetration into their energy sector. So we're seeing already a very, very, very anxious type of movement towards the study, towards measurements, and towards initial projects around 5, 10 megawatt scale. In addition to that, we're seeing, I mean, Jordan continues. The unknown, obviously, right now is Iran, but I suspect that that could be an interesting topic in itself. But I really now do have very high hopes for the Kingdom of Saudi Arabia, and I think that could really, with the push in Egypt, with the changes we're seeing in the Kingdom of Saudi Arabia, I think the region is up for pretty exciting times. And not to mention, finally, the 350 megawatt plant that's looking to be developed in Abu Dhabi, where we did the pre-feasibility advisory on that as well.
So for you, it's Kuwait, and definitely you are a big buy on Saudi.
Absolutely. We're the whole for us, the region is because we're right at the policy level. So we do the measurements and the policy and the planning.
I think
what
you
we
are
can
right.
see, we can see the solar boom is really beginning to take pace, and we're struggling to actually keep up with it.
We are always, I always believe Saudi will definitely embrace. It was just the timing of the concern. And I think this is the key. And so far, from the investor perspective, it was very hard to actually bet on that in terms of resources, in terms of the companies that we have seen. A lot of companies came in, set up 4 years ago, and they're sort of somewhat disappointed. But the good news is that there are a lot of Saudi companies are actually leading in renewable. Abdul Latif Jamil, an example. Noor is on desert technology. They branched out of it and actually went from inward to outward. And I think that's the good news. I just want to highlight a market which is the largest market today in terms of renewable, in terms of installation. That's.
If you want me to add on the Saudi market?
Please.
Please.
Briefly, please.
Yes. As far as the Saudi market, as I said that, okay, it is slowly picking up, but I think gigawatt projects are coming. That is for sure. SEC has signed EPC contracts for 100 megawatt CSP. They have signed an MOU to build 50 megawatt in south of Riyadh, Al-Aflaj. And
the famous 5 cents, the project.
5 cents, yes,
okay.
Yes, that's right. And I think there are also some 500 megawatts being planned.
By SEC?
In the kingdom, let us I would say. There are also projects that are going to be announced by SEC, solar and wind. I'm sure of that. And also, it's very important to mention that recently a revised plan for the renewable energy in Saudi Arabia has been presented and is now being discussed. This revised plan, unlike the KKR plan, is actually concentrating more on PV rather than CSP. So, as I said, this process is going on and the kingdom is serious about it.
So let's hope that we have 500 megawatt project this year. I think that will give a huge kickstart to the market.
Okay.
I think we are looking. Thank you very much. I think this is, and I think you mentioned also.
To actually add a few things. I mean, what is, and I've not heard this throughout the conference, is nobody's actually talking about capacity factor, right? And the thing that will actually drive these markets is basically capacity factor, and it's the utilization of the power plants throughout the whole year. So if you look at basically power plants, and specifically Saudi Arabia, right? You have about 14 giga below a capacity, with having a capacity factor of lower than 20%. Those mean that those power plants really operate less than 14 giga. Now, the cost of those power plants exceed, they start from the initial starting cost, subsidized, 14 cents all the way to 45 cents, right? Where you have capacity factor at 5%. Yep. Now, and it's that pyramid right at the top, right? And solar actually fits just perfectly, and you can move the base load.
Fundamental is there.
No,
but
it's
just a matter of.
And before, it was a way to make more money. Today, it's a way to balance the balance sheet, and the drive has shifted dramatically different. Now, to just comment on this 5 cents, and right, this 5 cents is government to government, so let's actually not mistake that this is like a norm, or that famous 5 cents is a government to government.
We'll come back to Dubai and talk about this 5 cents again. Yeah. Because it seems like we are going always around the 5 cents. Yeah, and I want to understand the magic figure of 5 cents. But
just one other point on Saudi Arabia. I'm very happy to hear all the positive news about Saudi Arabia, and I think we all knew that the potential is there. There's a huge potential in the market. But I think to create investor confidence, part of it is to set out a strategy and to deliver on it piece by piece. And when I look at that as an investor, then I think the role model there is Dubai and DEWA in that matter. I mean, rolling out a clear strategy of 1 gigawatt to 2020, 5 gigawatt to 2030, and then starting to delivering it on it.
Actually,
in a very
they had
clear
that.
And transparent process.
If you look at the KKR program,
I think it's key to
they have the plan.
Create
they have the,
investor confidence.
No, they have the plan, Andre. I mean, I think, with all due respect, I would have a different opinion. I think Saudi had a great plan, and it's rolled out every year. It was almost, Robert, if you correct me if I'm wrong, it's a gigawatt plan. Every year they will have 1 gigawatt of roughly, plus or minus, of PV, another gigawatt of CSP. So this was the plan before, and it was pushed by 8 years. And then there was a discussion between whether it will be initially they will start the market as an EPC basis or feed-in tariff basis. So there is a whole lot of things. The idea is the fundamental is there, as clearly mentioned by the panelists here today. It's just a matter of timing when it's going to start. I think that's the key message.
There was a plan, but there was no execution behind the plan. So the plan, unless it's executed, it's not helping the country itself. Now, with the changes that are happening in the country, we're not waiting for the plant to come up. We have a large logistics center north of Jeddah and King Abdullah Economic City. We're doing the economics of setting up 50 megawatts in our own site there with the car park and the rooftop.
50 megawatt.
50 megawatts.
That's a lot of car park.
Well, we have about 60,000 cars in a car park. So it could be the largest car park in the world.
So this will be basically based on the economics in itself, rather than...
Yes, yes.
Perfect.
That has to be a standalone project that is profitable. We don't like to take bets. We want to make sure that it is sustainable long term. Same as when we look at manufacturing opportunities in Saudi, we have done a very extensive costing analysis with a technical partner to make sure that anything that we do in Saudi in terms of starting to create a renewable energy industry is sustainable long term. Otherwise, the jobs will not be sustainable. If you're not able to manufacture in Saudi and export to the rest of the world and be able to compete on a fair basis, the jobs are not sustainable. So we're looking at doing this on our own. At the same time, the changes that are happening in the country, somebody needs to take the lead and make this happen. And all we need is an off-taker with a reasonable price. We'll go to the banks and we'll get it financed. The current situation of the low price of oil helps the fact that in the past there was a tendency of moving everything towards an EPC model. If you go to an IPP model, we put in the equity, the banks put in the balance, and the government just has a variable cost going into the future. Let's say basically a take-or-pay type of agreement with a fixed price. They know what it's going to be. There's no fluctuation in the cost of generation over a longer period of time. So I think we're in a good situation to move forward. We just need someone to push the execution.
I hope they move forward to a direction. I think what you mentioned is crystal clear. Last year, the budget, as you know, the deficit was 100 billion. So 2 years will be 200. With that rate, in a couple of years, I think economists estimating in 2 years' time, all the surplus that was built up over the last 10 years will be dried up. Mm-hmm. So one of the way the energy is to purchase, basically have a visibility, a cash flow visibility for the last 20 years instead of investing in all at the same time. Unfortunately, last year, the region has invested 13.5 gigawatt of energy just to maintain the replacement. So this is,
yes,
this is where the key issues are.
We talked only about generation here. Most of the increase in requirements for power come from either air conditioning or desalination. And we're looking at merging renewable energy with desalination. And our initiative at MIT, the Jameel Water and Food Security Lab, is looking at taking new technologies for desalination in the water-specific area. And we're bridging the gap between a lab concept and, let's say, a small startup concept to a commercial viability and scalability of those potential projects. So, and in the air conditioning area, we're looking at air conditioning efficiency. We're also a huge supplier of air conditioning systems in Saudi Arabia. So we're looking at being able to store cold to make the energy of the air conditioning systems more efficient.
Application and the efficiency. I think this is part of the solution. I go back to first, thank you for those additional highlights. I want to talk about a market which has let's say in terms of building up capacity in the region beyond anybody else's, anticipation was Morocco. They have installed capacity today more than 800 megawatt. I think the number I checked was 823, mostly those CSP based. Yasmin and I talked about. If you can tell me that, do you believe Morocco today has the right level of infrastructure to go for the next step? And what has worked in Morocco? And what you have learned in those, while you're building those capacity? If you can share with us.
So just to recall the context, in Morocco we have set a clear framework that gave certainty to the market players. And we always were pursuing not only to develop large-scale solar and our ambitious 2 gigawatts by 2020, but also to create a real local solar ecosystem. that would create a strong industry, and we have clear achievements in this respect.
So the ecosystem you talked about, it's essentially manufacturing, local job creation, services for a certain type of industry, I imagine.
Yes, a
So you
solar.
can elaborate on that. I think that would be great.
And we have reached 32% of local content integration for the NOR1 phase project. So it's, yes, local
32%.
32%
in terms of the total investment.
Yes.
That's. I think you guys have started with 20%, and I think
We've
shot up
started
to
with
over
30 and it's 32.
32%.
And on the ground, it has translated in clear achievements. As you said, we have 500 megawatts of projects that have secured financing or are under at commissioning, and 500 megawatts, more than 500 other megawatts of solar that are starting in the pre-qualification process. And in all this, we have close coordination with the ONE, that is at the same time the infrastructure, the operator, the grid national operator, and that operates the grid. So the infrastructure that is needed to integrate this solar energy has been planned, and we work with precise timetables in order to be able
and are
to
those,
integrate.
because we know that this 500 megawatt is by one provider. I think we all know it's Aqua. Is it, in terms of delivery, are the project on schedule? Do you see any, I'm not sure you can disclose it, but how do you see it? Was it according to the plan, or you had to do some adjustment because of one large project by one player? How do you adjust it?
We cannot say that it was one project under one player. There have been 3 separate international tenders in which at the end of the day we had the same team working on it, but not the same structuring, because in NOR1 we had it's not the same EPCs, not the same consortia. But for that, that is why the most important is to be able to adapt and to look for the guarantees and the good risk allocations in order to be able to make sure that during those 25 years, none of those 3 projects will incur a risk on the others.
So you kept the structuring of those 3 projects separately,
it's
the
very
EPCs,
separately,
the suppliers,
and the contracts really look for every risk allocation in order to make that each player will bear the risk it controls the best.
So essentially, it's actually 3 projects, 3 different. It happened to be one investors.
That's it.
I think it's an important point that actually brings me to the next point, the DUA 800 megawatt project that has been just announced. And Roberto, we had a chat outside. How do you see it going? I know this is CSP technology. If you build one huge gas turbine, yes, you can put a gigawatt project. On PV, which is essentially millions of panels, land, financing, banking, it probably will be one of the largest projects in the world, if I'm not mistaken. What are the challenges to have it one bidder? Does it make sense? How do you see it? Because I know that you are one of the contender in this.
Yeah, it is one bid. However, it's 3 phases. Phase 1 is 200 megawatts, and that's compulsory. You need to respond to that one, and you need to have committed financing for that project. Then the alternative one will be those 200 plus 300, and then the third alternative would be 200 plus 300 plus 300. So it will be built in phases.
In 3 phases.
Yes, it could be the largest. What is not clear yet is what is the decision process. Who wins, the lowest price on the 200 megawatts or the lowest weighted average price of the 3 alternatives? So there are things that are still not clear for the project. Financing will be tight. We don't see the same liquidity that we saw the first time around. We were the second lowest bidder the first time around. So it's going to be very competitive. And you were talking about the 5 cents. We don't know if it will get to 5 cents. But I'm sure it will be below the previous tender. Of course, there's economies of scale when you're building 800 megawatts versus the 200.
Because the announcement, as you clearly seen it, that you expect that it should be 5 cents or below. That was the expectation.
Well, yes.
Is it realistic in this high financing, I mean, the high rate
No,
environment?
but
The key
the key thing is financing. I mean, if you looked at DEWA the first time round, I mean, you had financing which was really abnormal worldwide. I mean, you had almost 86, 87% financing at 1.2 or 1. More or less, right? So those levels of financing don't not exist anywhere in the world. And it was treated as a sovereign debt per se. I mean, since D was 51%, there was also, I mean, the land was for free. I mean, there was a lot of different factors affecting the price. It wasn't just, just the price. It was a combination of factors that helped to bring those prices down.
However, when we bid, the actual bid stated that you could not leverage more than 80%. So eventually, yes, the alternative bid had more leverage, but the 100 megawatt bid stated that it had certain conditions that need to be met. And in this case, the same thing. And there's differences from the first bid. There's more requirements for the bidding consortium, more requirements for the EPC. There's a lock-in period for 10 years that we didn't have before. It was a lock-in period for 2 years. So it will be a very competitive bid, very complex bid to put together.
I guess the key question behind the
please.
project is bigger always cheaper? Yeah, and we will find out as part of the project. But you can look at the different elements in turn. I mean, in EPC, you clearly have economies of scale to a certain point. I would say after, I don't know, 500 megawatt or something, you also have increased guarantees, completion guarantees and things like that. Less competition on the EPC. When you look at O&M, clearly also economies of scale. Beyond, I don't know, 500 again, they will probably become marginal in increments. The key, and it was pointed out, is financing. Then there you probably have a U-shaped curve with an optimum that really depends on macroeconomic factors, on where you are. It may be between 200 and 400 megawatt or somewhere else. I mean, we will find out in talking to the banks. And when you put that all together, it will determine whether, where the minimum is. The good thing about the DEWA project, it gives you quite a few options to the bidders as well as to DEWA to pin down this optimum and take the offer on this optimum.
Thank you. I think that's a good point. I will move into I will take some questions now from the, before I move to my last questions, from the crowd. It talks about essentially the more business model. How do you see the business model, knowing that today there is a utility model? Noor mentioned about the peak shaving. We know the Saudi, there is definitely potential, but timing is still, could be questionable. It's coming, but it could be 500 or 2 gigawatt. What are the new business model? Is there any? Do you see, if you can just say one word from each panelist, is there any new business models going to emerge because of the necessity? I think, Robert, you mentioned you're not going to wait for the feed-in tariff or the PPA. You're going to go after the rooftops, distributed generation. What are the business model that's going to emerge for the next 5 years?
Distributed energy, in that case, for our own infrastructure, the sales model and the execution model of a distributed energy, let's say, approach is very different from what we have today. But we're also looking at battery storage. We believe that PV plus battery storage is going to replace CSP and storage. Today, on a 2-hour basis, our numbers show that they're basically about the same cost. As the battery storage prices go down, we expect those 2 hours to be expanded further. We're currently analyzing over 40 different companies and battery storage technologies, and we're actually bidding on a battery storage project that combines PV plus batteries
in the region?
In Australia.
In Australia, okay. Which market is much more a little bit
it's different.
Mature in terms
the pricing,
of the
and the pricing is different. The retail prices are different.
But you can see the potential in the region because of the dual peak here.
Eventually there will be. There's a second peak, of course, in the evening hours. Our aim is to use PV during the day to not only feed into the network, but also charge the batteries and then discharge the batteries over the 2-hour period after sunset. Now there's different battery technologies because in that case we have one cycle, one full charge discharge cycle every day, and some of the battery technologies are based on thousands of cycles because they're more of a let's say signal stabling or electrical signal stabling solution. We're looking more at one or two discharges per day.
Okay. Any other comments on the business model that you see it emerging or emerge from the rest of the panelists?
Well, there's several geographies that have different approaches. For example, Morocco, we're very interested in Morocco, and we've been active there for many years. But they have the possibility of us finding the off-takers, private off-takers, and building a power plant and selling the electricity directly to those off-takers.
It's a utility mode on a village,
yes,
basically.
Yes, and then ONE would do the transport of that electricity,
okay.
But we can actually reach an agreement with a cement factory or whatever it is and sell the electricity to them. I think that type of model also helps. It is complex from a regulatory standpoint. If you have established a regulatory regime, that changes that regime. But that's a good possibility. Self-consumption is another possibility as well.
Thank you very much. So I think we'll see in terms of there will be storage, certainly the carrier. The other will be the island mode. So where we can, my last question, I think we're out of time now, but if you can be just brief, I will just ask everyone the same question is, if you had to pick a solar destination in MENA region for the next 3 to 5 years, give your top pick, not 5, just give your top pick 2 countries. Let's put it this way. I'll start with Andreas. What is your pick for the next 5 years? I'll not hold you accountable for that.
For the top 2 countries,
yes.
It's the UAE and Egypt.
UAE and Egypt, okay. Mohammed?
My money's on Saudi Arabia.
Perfect.
Twice.
Twice?
Let's give a big hand.
Nice.
Noor?
Saudi and Egypt.
Saudi and Egypt.
Saudi and UAE.
Saudi and UAE.
Definitely Morocco.
Definitely Morocco. Absolutely. And the next one, after Morocco?
The next one, the Emirates.
The Emirates.
Yes. I think the Saudi and the Emirates are.
Okay, great. So it's basically the winner is Saudi, Emirates, Egypt, and UAE. Fine. Thank you. Please give a big hand.